In this video, we're going to go over the common mistakes beginners make in trading. Now, there are a ton of different trading strategies out there, so a lot of the specific advice you see on YouTube might not apply to your trading strategy. But the mistakes that we're going to be going over on this video apply to all different types of trading strategies. Now, before we get started, if you want live trade alerts and you want to join a network of traders, you can do so by joining the Discord. A link is down in the bio. It is the cheapest Discord out there at only $5 a month. It's less than buying a cup of coffee at Starbucks every single month. An example of the trades posted in the last 2 weeks, we had 900% returns and then 250% returns last week. Now let's get to it. Mistake number one is not having a strategy. You should pick the type of trader you want to be and then master your craft rather than being a jack of all trades. There's day trading, there's swing trading, there's crypto trading, and then there's options trading. I personally am an options trader. In my opinion, options trading has the highest ceiling and the most flexibility. It lets you make money when stocks go up, when stocks go down, and even if stocks were to stay flat. It lets you make trades with very low money up front. It lets you create passive income, and also you can find trades that give you great returns like the ones we posted in the Discord server. We're talking about 10x in a week's time. That's very hard to do outside of trading options. But regardless of what kind of trader you are, it's very important that you stick to it and you master your craft. Mistake number two is trading too many different types of stocks or cryptos. Stocks and cryptos of different market caps and of different floats are going to trade very differently from each other. For example, a low float penny stock is going to be extremely volatile. This can provide more opportunity, but it also provides much more risk. And low float stocks can be influenced by just a couple different types of buyers. This makes it more likely that they're not going to follow technicals, and you could be left holding the bag within an instant. Larger cap stocks, which I personally trade, are less volatile and much safer. Volatility is your friend as an investor, so if you are going to be trading larger cap stocks, you need to time them right based on technicals and upcoming catalysts. But regardless, you have to pick a category or a couple categories that you want to trade. Mistake number three, and this is a big one, is not keeping all trades consistent. Traders can often get too excited about a particular trade and put too much money in that trade. And then if that trade goes wrong, they are left holding a massive bag and it's a huge setback. It's best to keep all position sizes and the risk to reward on every single position that you enter in within a range that makes sense. This makes it so no one trade is detrimental, and this allows you to focus on the process, on your system rather than the individual trade. Once you perfect your system and the odds are on your side, then it's okay if you don't make money on a given trade because you know you'll get it on another trade. Mistake number four is letting positive trades turn into losers. In my personal strategy, when my position more than doubles in size, I like to take out my initial capital. This lets me continue the trade with house money, and it's essentially a free trade at that point. This does three main things for me that I love. It locks in some profits and gives me a free trade, and by doing that, I free up capital to enter into another trade. And then the third thing that it helps with, which is mistake number five, is it helps control my emotions. When only house money is on the line and I've already made some money or locked in some profits off of this trade, I am going to be far less emotional than if it was my initial capital. Less emotion typically leads to more gains, and new traders have a very hard time keeping their emotions in check. Even experienced traders, when there's a lot of money on the line, will get emotional. To not be emotional is to go against human nature. So the best way that I can do it is just lock in gains and play with house money instead. Mistake number 6 is not signing up for those trade alerts and joining the Discord. I'll see you there, and thank you for your time. This is We Are Investing, and together we are invincible. See ya.